Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, in the last 24 hours of trading, the Australian dollar has suffered much volatility in the domestic political turmoil, while the Australian dollar rebounded towards the end of the last week as the market welcomed the new Prime Minister Scott Morrison. It is indeed the third weakest week that the bears have held on to the reins. The newly appointed Prime Minister Scott Morrison, before the former Treasurer, beat Peter Dutton, the man who launched the strike against the ex-PM Turnbull. By an adjusted 45 to 40 votes, Scott Morrison came through. So with the market trading in a whipsaw manner, and as you can see, locked in the parameters of 72 cents to 73.70.80, it is assessed that the market should continue to foul any upside challenges. With the lack of the momentum from the indicators, does support the move away from the 45.80 area, with the 60-day moving average seen above, with the market looking down towards the 72.65.70 area. I believe the market will eventually challenge this base that is seen around 72 cents. Well, the dollar index surges on Friday after the market all began its weaker US dollar after President Trump took a swipe at the Fed in terms of hiking interest rates. Then on Friday, the market appeared to have taken the Fed chairman's first speech at Jackson Hole somewhat negative or bullish for the euro on Powell's surprise dovishness. On Friday, the euro dollar got an extra boost of momentum or US dollar weakness after recent remarks from the Federal Reserve Chairman Jerome Powell, speaking for the first time at an annual conference of central bankers in Jackson Hole, Wyoming. Fed Powell struck a measured tone about the economic outlook and the economy that the Fed plans to stick with as a gradual pace of rate hikes, currently locked in one at September and penciled in for the next hike in December. Powell went on to say that the central bank recognizes the need to strike a careful balance between its mandates of maximizing employment and keeping price increases stable. The US dollar index, which measures the greenback strength against a basket of 6 major currencies, did hit a low briefly at 94.91 before settling in New York on Saturday morning on the close at 95.05. With any attempt expected to fall above the region of 115.75 resistance, should keep the bears on the path to the downside. However, the strategy is that the market should look towards 116.35.55 if re-challenged as an opportunity to short the market, as I mentioned, with a cap around 16.95, I'll be looking down towards 115.55.60. Well, the dollar yen still holding its bullishness since the market broke above the trend line of 110, to be accurate, 60.70. From the break, the market has inspired itself to hold to the bullish sentiment towards 111.55.65. I am a little bit cautious of the move though, because we haven't fully got the technicals to support this bullish break. Therefore, could easily see it fail and to return back towards the region of 110.55. So do keep an eye on that. If we do by chance clear 111.55.65, then I do anticipate further rises towards 112.50.60 and reassess from there. Well, the pound is struggling to find any attempt to rally since the recent retreat from 129.50. After Friday, the market still fears that a no Brexit deal was on the table. The bears have been in check with the decline since 130 figure, and since rebounding off 126.60 does question the current rise. It is viewed that the EU chief negotiator Michael Brenner and the new UK Brexit Secretary Dominic Raab have agreed to stop non-stop negotiations for now to avoid any kind of non-Brexit deal. But there has been new speculations, however, that Nigel Farage has claimed that Michael Brenner, the EU chief negotiator, would like the IRA to become an active again. It was reported in the papers over the weekend in the Times. Mr. Farage awards sarcastic full remarks to the negotiator for exploiting the issues of the Irish border to the EU's advantage in Brexit talks. However, Theresa May says that she's softened her Brexit stance and is seeking to keep Britain in parts of the single market to honour her commitment to avoid a hard border and to protect the Union. From a technical point, from these remarks is the fact the pound should continue to fall towards the 129.50 region and look back to the lows of 126.60-70. Well, the upside target of 1,206 has been achieved since rebounding of 80, which was I noted in the report as support. At present, I have no view, purely for the fact is that we could again see a move further to the upside, but I would like to see more, at least confirmation from the technicals, even though the MACD is bullish. If we do break above 1,206, next target comes in around 14 to 21. Support on the day seen at 98. And to round off with the oil, well, the market took a stab at $68.50, but no further challenges have been seen as the market retreats, as you can see from this candle. Keeping a very close watch on this market, 68.5 to 70 is a resistance. And if we get a close above there, then of course we do get further confirmation to the upside. But from a technical point, I'm keeping a close watch, but it is trending. The RSI is a little bit overpulled. If we get a break of 67.10, then this would re-trigger the downside and look for a bearish case back towards the $66, maybe lower. Well, that wraps up for today. Thank you very much for joining me. As always, look out for the intraday report. I hope you enjoy the great start to the new week.